Hello guys, so here we come. I am just a little late with a few minutes. Hope you are here and you are waiting for the session. So as usual, we try just to see and to make this as a discussion as always, so you are able. Hello, Juan de Casa, how are you? So, as usual, we try to just make it as a hangout session where you can ask questions, and I will try to answer your question as much as I can. And we try to see the market, we try to see stocks, we try to see trends. It's all about trading. Yes, Juan de Casa, you are number one today. Hey, Cruz de Guzman, how are you? Yes, you are the first. Mohammed bin Naba, Salam Kareem, Ramadan Mubarak, how are you? And as usual, I am good, thank you very much. It's a bit late at 11, but it's just the time, okay? Last week, hi QQ, how are you again? There are some people that they always ask questions and they chat and they have their thing, but there are others who in usual they don't participate, but they stay and listen the whole session, which is very good. At least if you have questions, you have answer, you will get answers, and then we can start from there. Now, as usual, thank you very much. Thank you very much, Benaba. Mohammed Benaba, where do you live? Do you live in Algeria or you live in USA? So as usual, before we, you are in Algeria. It's far away, but that's very good thing. Okay. Here we have Tamba Nyari. Hope I pronounced the word very good. I bought a call. The value of the call has gone up. I am now up 800, but the value of the actual share of the stock is below the break-even price. If I close out of this option, will I lose money? But how the stock is the break-even price, and you make money? So I don't understand. So you can just speak to me about what is the strike price, okay, and what is the stock price, and what is the price that you bought the call, because there are a lot of information I should get in order to check what have you done. Clown with the Twitter account, hello, how are you? Daft Bugger, did you follow the Berkshire Hathaway conference? No. See, Daft Bugger, why should I watch this conference? Now, Berkshire Hathaway speaks to his friends billionaires, okay? Or at least those who are filthy rich, 500 million, 800 million, 1 billion. This is his friends that he is speaking to. He doesn't speak to the people, okay? And you, except when you own the stock Berkshire B, okay, when you own But it doesn't matter. It doesn't matter that much. I don't know if you watch this conference. What's the new things you can get? He's speaking about his investment with his shareholders. Okay, it doesn't give nothing to us. I didn't buy the Berkshire with $300,000 a share. I didn't buy that, so I don't know what the conference will do to me. Okay. Nas Dinanochi, bonsoir, comment allez-vous? Clown with Twitter account. What's the difference between speculative and conservative stocks? Now, see, most of the time, the people when they talk, they mean something. Now, conservative stocks, it means a stocks that doesn't grow that much. And most of these stocks give dividend. Now, speculative stocks mostly are growth stocks. It means stocks that can appreciate in price. But in general, they don't have a dividend most of the time. So the people who have millions of dollars, in order to get a dividend and maybe to live from it, they use dividend stocks better than growth stocks. Because here is the difference. Growth stocks, if you bought a stock at $100, it goes to $200 in 1 year or two. How can you get money from the stock? The only thing you can get the money is if you sell some shares, because there is no dividend. Now, let's say another stock, which is conservative stock. Conservative, most of the time, it has dividend. It means dividend is taken from the price always. That's why it makes the price doesn't move that much. Okay? A growth stock or speculative stock doesn't give a dividend, so it is not stopped out always with this dividend. Okay? So that's the main thing I can understand from this conservative or speculative. And try always, when you are online, try to see, if you read an article, try to see what do they mean by these kind of stocks, because they will explain. Because sometimes people, they just say categories of stocks, but not necessarily these stocks are in that category. It means they just put it there. Okay? Now, thank you, Clown with the Twitter account. Thank you very much for your question. KQ said, I like day trading. It fits me better. Do you also teach day trading? Yes. See, KQ, if you want to do day trading, you need mostly 4 training. Okay? So, let's say I give you the training. So, training level 5, 6, 8, 11, and 12. Okay? These are the training that you need for the whole strategy. Okay? I'll put them here. Please check them. Okay? So I will explain. Training level 5 is how to make money from stocks. It means probabilities of making money. This is number 5. You should understand how to make money in general. Swing trading or day trading, it's the same thing. It has a concept that how to make money. Okay? Now, 6, it is how to use a stop loss. A very, very important thing. 8, it is how to manage your account. It means how to minimize risk and maximize profits. And 11, how to sell short a stock. This is in day trading. And 12, how to day trade using a chart and candlesticks. All these, you can just go to my website. I'll just give you the website. Check this training, and you can order them. Or you can do, okay, this is my email also. If you have a problem or you don't understand, you can send me also an email. Please take this information and copy them in your notebook. At least later when you want to call me, you can find this information. Now, hello, let's see with the Tampa option strike price 173 and break even 176. Oh, okay. So the strike price is 173 and the break even is 176. So what is the price now of this stock? Because you don't give me the price of now. Okay, another question from Clown with Twitter account. Why always the stocks shoot the opening? It looks hard to day trade. So first, what do you mean by shoot the opening? Understand the Clown with a Twitter account that in day trading we have millions of people that are trading. Each one is doing something. So you will never understand what's going on until you see the price. Do you understand that there are some people, they just short the stock without even looking at the price? They do dangerous and risky things. Sometimes they make the money, sometimes they lose money. Understand that day trading, why it is why we have a lot of problems in day trading, because there are a lot of people they trade and there is a conflict. Someone is shorting, someone is going long, someone is waiting, someone has already bought, someone has already sold. You know, you understand, it's always and if you want to understand better, okay, so in order to understand better, if you take, for example, training level 12, I will show you this opening and how to deal with them. Okay, at 9:30 when the market opens, I show you a lot of openings and I will give you a guideline what to do in each situation in order to see the direction, because the direction is so hard. So you should practice and practice and practice until you succeed. Now, another question from Clown with Twitter account. Why we have information for masses and classes? So what do you mean by this question? I don't understand masses and classes. And you say, why we have information? What kind of information that it is, this information of masses and classes? I don't understand your question at all. Okay? Now, Another question from Tamba Nair. Do you trade biotech stocks during PDUFA? Okay. See, Tamba Nair, when I trade stocks, I don't use news or information about the company or what they are doing online or what the government is doing. I don't do that. For me, I am a chartist. I use a signal. I follow the price. I don't care what the people say. If I buy a stock at $20, it goes to $40, and all the people, the analysts, all the people in the world, they say sell, 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 sell. I don't sell. Okay? So, why I do that? Because I follow the price. It's the price who gives me the money. It's not the people. You go to analysts, for example, right now to any stock. Some analysts say, oh, buy. Some they say sell. Some they are neutral. And others they don't say nothing. And there are some stocks that the analysts they say nothing because they are not interested, because it is very small stock. No one is interested in it. Okay? Because analysts think about big companies because they get paid a lot of money from these big companies, or the media, or anyone who has interest in his opinion. Okay? So for me, when I trade biotechnology stocks or any other stocks, okay? When I trade, I don't have nothing in my mind, only my signal, it means my criteria. If my criteria is asks me to buy the stock, according to my criteria, I will buy. I don't see information, and I don't follow information, because if you follow information, what does it mean? How much time you need? There are 24,000 stocks, ETFs, and mutual fund. How can you see the news for this? It's impossible. Now, if you are following the news, they give you the information they want you to give you in order to influence your decision, what to buy, what to sell. They influence you. It means they have something in mind. Okay? That's it. So for you, you should have a strategy to trade stocks. You don't just follow what the people say, or because the Food Administration said this, you should do this, without looking at the price. Okay? So, but if you are, for example, if you are investing in a stock, yes. Let's say you are investing in a stock and you are searching for information. Whatever is the information, it's okay, because you are investing in this company or in these stocks. But for me, I don't invest in those stocks. All the stocks, I trade them. I buy by the signal and I sell by the signal. I don't care what the people say, or what the analysts say, or what the company said about the stock. Okay? Hope this is very clear. So let's go and check other thing. Another question, Daft Bagger. Do you believe you have to have the correct life philosophy to be a good trader? No. Daft Bagger, see, there is no philosophy in trading. In trading, there are techniques you should know. there are ways you should protect your money, how to manage your account, how to do money management, risk management, stop loss, when to buy correctly, when to sell correctly. Even if you are mistaken, you can correct that. Okay? So this is what you should learn. It's just something that you should learn and practice. It's like let's say it's like a boxer or a bodybuilder. Do you think that he trains in one night and he will become a professional boxer? Or he does lifting weight and in one night he will become the world champion? The muscles of the body or techniques in boxing, it needs years to practice, because everything you have, you should get it, you should study it. So there is no that much philosophy. Now what is important is another thing which is very important. What is it? It is probabilities. You should understand how the account moves up or down, your account with the stocks. This has probabilities that you should learn. Okay? Now I will give you something that it is false, but people, they think it's correct. I will give you this in order to understand the probabilities. People, for example, think that the ratio between winners and losers is very important. If you have more winners, it means you will make money. This is not true. This is not true in real life, in real trading. But you go online and you find people thinking that it is a true thing. It is just a myth. It is not a fact. A fact is another thing, which is probabilities. And this, you will not find it like this in books, or some people like this talk about it and give the information for free because it makes the money. So everything that makes the money most of the time is hidden from the people. Look, for example, Warren Buffett. He said he read a book about investing. Okay? How many millions have read this book? Why he succeed and the other they don't succeed? Do you understand? Because it is his own way. He finds something and he discovers something, he tries it, it works, and then he continue with it. Maybe it's at the end of his life, if he'll show you this thing, you don't believe him that it is correct. Because it is all the people know it. But the problem, they don't practice it, they don't put it into the market. If you have ideas, you should put it in the market. If you think that your idea will be good, you just put it in the market, try it, do it, practice it. If you succeed, that's it. You will be making money. That's the most important thing. You have millions of strategies in the world. Millions. And the people there each day try to find other strategies. Okay? But there are some basic things you should know about trading. If you know the basics, you will begin making money. And then with the practice, you will be making more. And if you have a big account, you will be making more and more and more. It's not with like I see some videos with $100, you make $100,000 in a month. I have seen it in some videos. You know, that is a stupid thing. Yeah, you know, people, they sell dreams to the people. I can't sell a dream. Okay? Just a fake thing. And to make people believe that with 100 they can make 100,000 or $1 million in 5 months or 1 year. You have only $100. It's too little to practice. Now, Tamba Nair, you say the price is 175. 175. Break even is 176. So for me, you should the best thing for Tamba Nair in the morning of Friday on Monday, go to your at the open, go to your option and see if you are making money. It means that the break even, it's not just break even, but the stock is more than break even in order to make money, because you said it's break even. Okay, but understand that things change. So when you are talking like this, you are talking about Friday now, but in Monday, before the market opens, options and stocks are moving even before the market opens. Okay, so just try to see at that time and try to make a decision if you see some money. Another question about from Daft Bagger. He says, is the smart money shorting the bond market because interest rates are only going to go higher? Now, when we see smart money are short, you know, the bonds themselves, there are some people who short them each day, and there are some people who go long each day, big traders or small traders. Okay, but those most of the time they see when they trade for a long time, like swing trading or so, they see the economy and they see what's the thing that influence, like interest rate. But it is not automatic thing. It's not because something is going up here, you go short this here. This is stupid, because who are moving the market? It's the people who are in the market. So the people, they do things sometimes without thinking. They see that the market is going down and they buy to go long. So they get crushed. They lose money. So you will never know until you see the price and follow the trend, if they are following the trend of bonds. But for me, I'm telling you the truth. I have never bought bonds or traded them. Never. Okay, so even forex and bonds, I have never touched them. So it is another thing you should see, because when you buy bonds, okay, with interest rate, with this bond, sometimes the interest rate outside in banks go lower or go higher, and this influence, yes, it influences the bonds themselves, and the people, they do whatever they want because they don't own this for a long time. Okay, they just buy and sell. They are not, as I told you, they are not investing in bonds like 1 year or 2 years or 5 years or 7 years. They just buy and sell. So always there is a movement in these bonds. Okay. Now, Wendy Casa said, the market is moving sideways for a couple of days. No. Wendy Casa, it's not for days. It's for 3 months. It's from February, March, April, and we are in the 4th month sideways. And I have showed you this many times. Okay, you said most of the big stocks are near to the price before the correction. Is it time to buy from the support line from mid and small stocks? Now, this depends on where are the stocks and how the index. Now, if you are speaking about Dow Jones, you should think about the whole market and think about the 30 stocks that belong to Dow Jones. Now, before we, when we say mid and small stocks, mid stocks mostly are in S&P 500, okay, and small stocks are in Russell 2000. So let's show you, for example, the chart, and I will explain again what's going on. At least you have a clear idea. I have done this for 3 months and a half, doing a lot of videos about Dow Jones, about S&P 500, where are the stocks, and where you can buy or you can buy. But it is difficult thing, so you should some good criteria, as you know, to have this thing. So let's go to the chart. Hello, Wiseman. Let's go to the chart, and then I explain again, and I will tell you some stuff. Okay, let's go. So this is the Dow Jones. Okay. What's this here? Okay. So let's go to the Dow Jones, and then we go to each stocks as an example. Now, look at the chart. This is the day where the stock has begun to go down, 29 January, on Monday. On Monday, this is the day where the stock market has been going down. I made a live session on Saturday, 27 January, before the correction. Although I don't predict anything, but I see that this January was so good, and it was pushed by the analysts in the media. I have explained this many times. Now, the market has been going into a correction, and then it go up again, then it go down again, then up again, then go down again. Very good. Then go up again. You see how it is troubled, and then it goes up again. So it is trending into a range between this resistance line and this support line. So you should have techniques and where to buy, because the stocks are not the same are the index. This is the index. Now let's give you just an idea about 30 stocks. This is the 30 stocks. Now you see that, yes, you see that this Boeing, it's not really the same as the Dow Jones. It's doing better. I have showed you this. This is doing better. This is doing worse. Doing worse. Doing the same. Doing better. Doing worse or the same. The same. Worse. Doing better. Visa, for example, is doing better than Dow Jones, because it's going into a trend, and you can see it might go down, but it's better than now. Okay, so as you can see, all the stocks that you can see are not the same. And whenever you want to buy a stock from the bottom, you should just have the nice criteria. And you see, for example, Walmart is doing worse because see, a gap down and it's going down, going down, going down. So Walmart is not doing like Dow Jones. It's doing worse. Okay? So you should have techniques on how to buy from the bottom and which stocks to use. This needs techniques. Let's go back. So hope Wendy Casa, you have understood what I mean by trending into a range. Now, mid stocks and small stocks, especially small stocks. Small stocks, they don't follow the majority of them. They have more other buyers than the Dow Jones S&P 500. Now, mutual funds are more interested in the big stocks because when they can buy a lot and it doesn't show in the stock. But if it is a small stock, $10 a stock, and it has a lot of shares, if one or two mutual funds begin to buy, it could go so big in few days or few months. So mutual funds understand they don't want to show their hands like this, to show that they are buying, because it will be very easy for every person to make money. And them, they can't make that much money. Because mutual fund needs us. When we buy, and they buy, and we buy, and they buy, it means, and the stock will be going up and up and up and up. And then one day they sell, they can make money from us. Understand that the public is the one who is paying everything. The public. Even when we say mutual fund and they make money, it's for the public, for those guys who are taking fees and the other stuff. So everybody is eating from the public. Everybody. Jamie said a question. Why do you think of a bond fund for long-term investing like in a 401k? No, a bond fund is a fund that buys bonds. And this bond fund, mutual funds, they are in 401k. They buy this bond. Because, when they buy bonds, they know they mostly, they will not lose that much. They will not lose in general because there is interest rate. Okay? That's why a lot of mutual fund, they put, for example, 10% or 15% or 20%, depending on mutual fund. They buy bond funds. They buy them because they give them a percentage, 5% or 6% or 7% or 4% for each year, regardless of the market, because they don't think about the stock market, because stock market is volatile. They can make a lot of money. They can make, for example, I will give you just explanation, at least you will understand. Okay. Let's say the real market, stock market, is doing like this. Let's say we begin from here and here. Let's say it makes 25% in 2017. Just an example, okay? This is the stock market. As an example. Now understand that in the same line, now here we have bonds. Let's say they give 7%. 7% is just here. Okay? So you see the difference? between stock market and bonds. But bonds, most of the people are old people, and some mutual funds, and those people who are conservative, they buy, they don't care about the market, what it does it give, because the market here is risky. Understand that in 2008, the market has lost 50%. Okay? But if you put your money into bonds, maybe you break even, but you don't lose that much money. Break even. Or you make 1%, or you make something, but you don't get 50% as a stock market. That's why this is risky business, and this is conservative business. This is mostly for the old people and the mutual fund that are conservative. It means they don't want risk a lot. Let's say you are very, very old people, more than 60 years old. It means retirement. You are 60 years old or 65. You don't want to have risky investing. So you limit the stocks that you have and you put more bonds. This is what they do. It's just because they get scared if they lose 50% like 2008 here. It will be catastrophe for them. Let's say this guy at 60, he has $400,000 in his 401k, and he put all his in stocks, and in 2008 he will lose $200,000. Okay, so you see, and since the person is very old, 65 or 70 or 80, he doesn't like to lose that much because he needs the money to live. He needs this money to live, and he will take money from his account. So it's better to be put in something that it is conservative than to put it in a risky market. This is what I mean by that. And guys, if you have a 401k, you can already go and do whatever you want because they give you possibilities to buy some limited things, but they will show you all the mutual funds, and each mutual fund what is the percentage of bond, if he has bond or not, or if he has something else. So be careful. You can go to your 401k, you find your mutual funds, and you see what is available for you. You can change, because here is the thing. Sometimes it is funny. Okay, I will show you this. Maybe you are interested and you go and check. Okay, so let's go and show you something. Now, let's say you have a 401k. Okay, you are investing in from your job. Now, you know that your company has a broker that makes these things. The broker. Now, the broker of this 401k, what does he do? He will show you mutual fund like this. And each mutual fund, you can see the performance. Okay? Performance, it means how much is this mutual fund, number one, is doing. Let's say this year 3%, last year 5%, but in 10 years from the beginning, it has done minus 2%. So you understand that in 10 years, this mutual fund is doing bad because it lost money. Now, if you go to the market, in 10 years, it gets, for example, 75% growth. This is the real market in stocks. So you understand that this guy who is managing this mutual fund is a bad manager. Sometimes, number two, you find -5, -8, -13 in 10 years. And still your broker is putting your money into this one and into this one to make it stronger and stronger and stronger. So you should understand that you need at least one in a year to check where the money is put, and you can change that. Because he will not change for you. Even if he knows that this, let's say another one, he gets 15% in 10 years. He get 10 years last year. He get 13% this year. This mutual fund number 4 is excellent, is doing a great job. But you find that your broker has put only 10% of your money in this one. And he put in the losers, he put 20% here, 20% here. So my suggestion is go to your 401k, don't speak to anyone, just go to it, to your broker. If you don't have an account, you should make an account and enter and see where is your money, the contribution, where it's going. If it's going in a bad mutual fund, you change them. And the broker will say to you nothing, because it is just because brokers, they do the thing for themselves. Maybe these guys, this mutual fund, they give him a percentage of this money. Okay, so this is business between each other. That's why the broker put it in this, and it doesn't put in this. So your job is to check mutual funds, to check what they are, what are the stocks that are in, what is their performance during the years. Are they doing good or doing bad? Most of the people, I'm telling you that maybe 99% of the people who have 401k, they have never seen inside what's going on. I'm telling you this, 91%, because the people, it's not they don't care, but the people, they are not aware of these things. They think that the broker or their company is doing good for them. But who knows better about your money? Is it the broker or is it you? It is you. Since you see your money you are losing money each year. Okay? So this is just an idea about 401k. At least you get an idea. Now, Wiseman, how are you? Good morning, good evening. Islam A good point. Thank you very much. If you have a question, just ask, because we are just here. Okay. Now, there are many questions. I will try to be quick and answer all these questions. Clown with Twitter account says, for me, big trends are associated with some of the IPOs. Do you think it's true? And why they make an arc during the trend before they head higher? It means why they make an arc. It means they go down into a downtrend and then they go up. Now, I will tell you, Cloud. I will just give you an examples, and then I say, IPOs, most of them, they don't succeed at the first. Why? It's just because these companies are new. The investors, the analysts, they don't have an idea about them. They just begin to discover. Because when I will just give you how things work. Okay? Just to understand these ideas with IPOs. Now, let's say in IPO, it stands for initial public offering. Now, what does it mean? It means this company, which is an IPO, which is a new company, is offering shares to be sold in the public, for the public. It means for everyone. Now, because before here, let's say here is private. Now, when the company is private and you go to them, each company has what we call investors side, investors section. It's at the bottom of the website. And if you ask them, I want to buy shares from you guys, the private company, if it is a very successful company, they will not sell shares. No shares to sell. But when it is an IPO and it wants to enter to the market, this is the market, the real market, the public, the private company has millions of shares to be sold in the market. Okay? Now, let's say the stock begins with $10 the first day. Now, who's asking? Yes, a clown with Twitter account. He said, why the companies, they go down like an arc and then they go up and they make a very good trend. Let's say here 10, the stock goes to 7, and then from 7 now it is 25. Okay? This is an example of an IPO. Now, why we have most of the stocks, IPOs, they have this downtrend. Downtrend, it means the stock is going down. Because the investors, they don't know nothing about the company. Is it making money? Yes or no? So the company, when it becomes public company, what does it mean? It means it will give each 3 months, it file for the earnings. 3 months, 3 months, 3 months, 3 months, 3 months. Now, when they begin to file, the analysts and the professional companies, they begin to analyze the files. Is it making money? Yes or no? Is it making money? Most of the time, they are not making that much money. That's why the companies are going down. Now, when the stocks begin to go into a big trend, now what does it mean? It means the earnings are better than the analyst, and the companies becomes famous, okay? And they begin showing money in quarters like this, and all the people we know about them, so the people will begin to buy this company, okay? But not all the companies are like this. Some companies, they go down and they will never go up. They lose always money. And now, for example, it continues to lose money until now it is $1 or it is 5 cents or 10 cents. So not all the stocks are like good. But his question is, are just the IPOs? No, it is not the IPOs. Okay, I will give you an example. Okay, take an example of Apple. Apple before was $100. In a few years, it go to around $750. And then we have here the split. This is I think the last split. Okay, let's say it's 700, and it says 7 4 1. It means when the stock is $700, Apple as a company decided, because the stock was so expensive, they decided to split the stock 7 4 1. It means if you have $700, you have 1 share. Now when it's split the next day, how many shares? You will have 7 shares, and the stock is $100. But from $100, now the stock is let's say $75. Just an example, okay? I will check right now the Apple, what is it? So from 100 to 175, okay? So this is a big trend. It might in the future Apple have another trend, okay? Maybe 1 year, 2 years, 3 years, 5 years, 10 years, we don't know. So understand that not only small stocks or mid cap or small cap that they have big trends, or IPOs, all the stocks can have big trends. There is no exception. Now the only thing that makes the trend is a lot of people are buying because the company is doing good and there is good reputation of this company. It is making money. Like for example, we take another example. What do you think, for example, about Amazon? Amazon now I think it's $1,500. But I ask you the question, how much was Amazon before? It's a big trend. Now let's go and I show you Amazon. Okay, let's go to the yearly. Okay, look at this. This is the yearly. Each candlestick is a year. Now Amazon was $5.50 in 2001. It was $1.31 in December 1997. It is $1. Now it is $1,574 in many years. Okay? So it's not just IPOs, or it means any stock can go into a good thing. Now let's say we have Google as an example. Google was 47. Now it is 1,066. Okay? So things are always sometimes good for some stocks with big trends. Okay? So let's go back. So this is just to explain a clown with a Twitter account to explain to you that the trends are always in the market. Stocks are always trending. Some they are going down, some they are going up. So it depends. If you discover a trend and you keep trading it in a few days or few weeks or few months, you can make a lot of money. Okay, so that's it. And I told you when the IPOs, most of them, they don't succeed in the first year, second year, third year because they don't show that they make money. When you see the earnings, you will see how much money they made. And the analyst has an opinion. If most of the opinion of they can make bad impression on the company. Okay, a big analyst, always you see him in CNN, and they say, oh, this company don't buy because it does bad, it's not making money, the management is bad, they do bad business, customer service is bad, they make bad products. Okay, it means, oh, the people is against it, so the people are scared to buy. Okay? Anyone who buys some shares, they will sell. You say, oh, okay, they say bad. But if a company is have a good reputation, a lot of people, they buy and they keep it for many years, for 5 years, 10 years, 20 years. Okay? Because it is a good company, and you see, you go to its thing, you find it's very good, and they are always making money. Each year is better than the other year. That's why a company is good. That's why the people, they buy the shares and they don't sell. Like Amazon, like Google, like other stuff. There are a lot of companies that are so expensive because the people, they like it. They like these companies. Now, let's go to the other question. Now, Tamba Nair, he said, you always talk about signals, so what is your most important signal in your trading? I will not say. Tamba, I am not here to explain my training to you. Okay? I'm trying to explain in general how I think about the market, how things work in terms of price, in terms what makes the stock go up or go down. But if I show you the techniques, it is a paid information. Okay? You should go and take the golden subscription, and you will have the training and you will understand. And if you don't understand and you want questions, you can ask me emails and I will help you. But I'm not trying to give you signals like this or to explain to you how I choose stocks. Okay? So this is just a general thing. That's why all the people that you are seeing here in my chat room, almost all of them are my students. They understand what I am saying. When I speak, they understand. Now, for others, I'm trying to explain how the market works. If you get interested and you become a student, okay, it's very easy. You just get the first training for free. If you get interested, go and do the subscription or go and order the training that you like, and you begin studying, and then you will understand everything I am saying. Okay? Because these things about signals, about the price, each trader has his own criteria, his own signals. Okay? And I don't have what you call most important, because there are a lot of signals. A signal, but it have a lot of criteria. We should see the signal, we should see the stock, we should see the chart. But the good things is that we don't see the company in news or information or what the analysts say about the company or the earnings. We don't look at the statement of the company or what we call financial statement in order to be sure what I am speaking about. We are not doing here investing. It means when we get interested to buy a stock, we buy it according to the price, to the chart, to the trend. Okay? This is what we are interested in, the chart. We are not interested in the company, what it does, how much money it makes. Who cares? If I buy a stock at $10, it goes to $20 and I double my money. And online they say this company is bad. For me, what's this thing when they say bad? For me, I make money. I don't care. Okay, so you should have this mindset that what the people say, it's their problem. I am not worried about what they say. Okay? Because they can't move the market with what they say. If the stock is going up and a lot of people are buying, mutual fund are buying, the stock will go up by force of buying. So the more they buy, the more stock goes up. Okay? So we don't care about what the people say. Okay. Tampa Nair said, do you share some of the stocks you are in right now with your students? Yes, sometimes I shared a stock for 5 months and 2 weeks, and the people are watching this stock grow up. Now, for me, I don't want them to follow me in the same stocks, because you can discover stocks better than me, because the search is daily. And you don't need to stay 5 months. You can stay a few days and you can make a lot of money, depending on the stock trend and the other stuff. Sometimes on YouTube I share my trades, but I will not say where I bought them. I say only when I sell them. Okay? Because for me, it's a trade. I don't know how the trade will be in the future. So I am like you. I don't know what the future, and no one knows. So when we buy a stock, we buy by probabilities. If it goes up, we keep it. If it goes down, we exit it. That's it. So we have rules to be applied in my strategies. There are rules you should follow. So you should study them, you follow them, you practice them, and then you will be doing the same as I do, or better. Okay? One student last year, he bought a stock at $36. He keep it for the next year. It goes to $256 or something. He makes 600 or 700% of his money. You understand that? If you put 20,000, it will be maybe 80,000, 100,000. This is what I'm talking about. It means whenever you find good stock, you should stay with it until you get that much money. If the stock doesn't trend that good, you exit it. That's the good. Hello, Robert Tijan. I know that you are my student because I remember your name. Thank you and welcome from Amsterdam in Europe. Islam A is from Australia. How are you? I have a lot of people from Australia, from Amsterdam, from India. A lot. England. I have a lot of students many years ago. A lot of students. Thank you very much for coming, and thank you very much for attending this session. If you have questions, just ask. I know the markets are not really the same, but when you follow the price, most of the time it's all the same. Okay, either they trend up, they trend down, or they trade sideways. This is the market everywhere, but some markets have some rules. In America, there is no rules. In America, in the price-wise, there is no rules. It means the stock, I see a stock the other day, last time, he showed us a stock, like a pump and dump stock. It was $2. In the same day, it goes to $45. $2 to $45. Okay? So these are pump and dump schemes. It means manipulated stocks. So in America, it's accepted. They don't care about if you buy or if you sell or if someone buys. It doesn't matter. In America, it's very good because there is total freedom in what you do in the market. You can buy whatever you want. You buy a stock that it is 2 cents or less than 2 cents or 0.0001, or you go to the OTC, which is more dangerous. You do whatever you want. Because when you lose, it's you who lose. If you make money, it's you who make the money. That's why it's good here in America. That's why a lot of my students in Australia, some in India, some in Amsterdam, they go and open accounts here in America because it gives them more freedom than their country's stock market. And there are a lot of opportunities because we have too many companies here in America. So, let's continue. Robert Tijon, you have a selling plan. Now, Tijon, what do you mean by selling plan? Do you mean when you want to exit from a trade? Yes. This is in training level 7, how to follow the trend. If you are thinking about this selling plan, I don't know, I don't understand what you say about this. Thank you, Duna, or Duna. I don't know how to pronounce this. I'm sorry. He says, or she says, good info. Thank you very much, Duna, and thank you for being here and for attending this session. Because I think you are new here. I haven't seen you before. I'm sorry. Another question from Arjun Nandakumar. I think he's Indian, I guess, from India. Would you prefer to choose on commodity trading over equities? No. See, commodities trading is based on leverage. It means you can make a lot of money and you can lose a lot of money. Your account can be wiped in a few minutes. It can be wiped out if you don't know what you are doing. So, commodity trading, you should know about commodity information and how things work. But you can trade. You can trade them. I can trade whatever is trading because I just use the price. I don't care about the other information. But in order to be professional, you should go further and study the market and study the trends, and any movement you can make a lot of money and you can lose a lot of money in commodity. So for me, I did not trade commodity. I'm telling you the truth. Forex, currency pairs, commodity, no. I have never done them. That's why I can't talk too much. But in day trading, it's the same thing. But the risk is different. Here, what I'm telling you always, stock market risk is different from Forex, options, and futures. Each one of those, you should study them, how the movement, how much money you make, how much money you lose. Because it is leveraged derivatives, like currency pairs is leveraged, options is leveraged, futures, which is commodities, are leveraged. So try to understand that the risk, if you want to do day trading, you should play small, 1 year or 2 years, until you understand and you make money, and then you can have bigger positions. Okay? USA 2008 says bonds less risky. Yes, it's true. It's true. When you buy bonds, you don't worry that much. It's less risk. And you don't make that much money. Yes, because the more risk, the more money. Okay? If you don't want risk, you are very, very conservative. Like in stocks, You buy mutual funds, you buy ETFs, indexes, and that's it. You get what the market is giving you. 5%, 10%, or minus, or it's always not that big deal. Okay, you get the average of everything. Hey, Go Ahak, thank you very much for coming. I know you are my student. I see your name. How to know the bottom? Oh, so Go Ahak, if you, I know you are my student and you have taken some training. Please check training level 13. How to buy from the stock line, from the support line. I have made 12 lessons in my golden subscription last week and the other week. If you have the subscription, please go to it and go through this 12. It will show you examples. It will show you industries. It will show you how to find this kind of stocks. I give you examples. Please go to that thing and see them. Okay? Diron MC, what is your opinion on closed-ended funds? You know, this is just an expression. If you are buying a mutual fund, for example, okay, you get the average of what the stocks are inside. But that's it. It doesn't mean something else, because it is the market that show you where this index is going up or down. So, as I told you, whatever they are called, like open-ended funds or closed-ended funds, this has nothing to do with the price. Okay, it has not to do with the price. It has to do with the stocks that are in this fund and the average. If they and understand. How do we know the mutual fund, which is a closed-ended fund or open-ended funds? We know them after 4 o'clock. Okay, so I will give you just an example to understand this. Okay, just to let you know how this mutual fund. Okay. Now, let's say a mutual fund price is, let's say, $75. Okay. This is yesterday. Now, how do we make the price for today? What do they do? Let's say this mutual fund price, okay? Let's say we have 10 stocks. Now, today, you will find 75 in the morning, 75 the same as yesterday, until we reach 4 p.m. Now, when we reach 4 p.m., after that, these 10 stocks, the close of the 10 stocks, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is the close. they combine or they sum up all these 10 stocks, they divide them, and then today, let's say, it is $76.50. It means some stocks have been going up. So the mutual fund today is 76.50. So this is the mutual fund yesterday and today, how it is worked. Either it is what we call open-ended or close-ended. It's the same thing. In terms of price, it's the same thing. So after 4, you will find the new price of this mutual fund, which is 76.50. Now, if you are thinking about ETF as an index, it is different. Okay? Let's say you take the ETF DIA, which is the Dow Jones. Now, when this is an ETF, it tracks the index. So this DIA, it tracks the index, and the index is moving. The index is moving the whole day from 9:30, let's say, to 4 p.m. and you see this index moving up or down. Now the ETF here, the ETF will be doing the same. Index going up, the ETF going up. The index is going down, the ETF is going down. So up or down. So it just on the moment. It means these things is calculated on the spot. Each second is calculated, and things have been changing from index to ETF. So understand, the ETF is not the same as mutual fund. ETF is following the index, and this index is calculated and it's given the price minute by minute or second by second, depending on the price of these stocks. So this is how things work for the mutual funds and for ETFs. Excuse me, there are a lot of things. Ace said, sound like Benjamin Button. Okay. I am not. So, a lot of things. So, sorry, Ace, I didn't watch that movie, so I don't know what's the thing. So Robert Polo said, Karim, Djellala, which broker do you like? Okay, so Robert Polo, I have a broker before called Options House. It was one of the best ones that I like. It was a small broker. It has what we call a virtual account. The commission was so cheap, $2.95 at that time. But unfortunately, my broker was bought by E-Trade. So I am now with E-Trade. They cut this what we call a virtual account, so there is none, and they raised the commission. Now it is $6.95, which is so bad. But for me, they give me the old $3.95 as before. They don't change it. The old customers, they don't change. So if you want to do a broker, you should search between these big brokers, see their commissions. Okay, mostly their commission and their fees, like interest rate, if you are going to do margin account. So these two things you should check them, and check inactivity fee. If, for example, you don't trade in 1 month, do they charge you? Yes or no? Another thing you should check, which is streaming data of the bid and the ask. So I will, Robert Polo, I will just make this for you, man, just to take notes very quick. So in a broker, you should see 1, commission. Okay, commission, it should be good. Most of the commission right now is is 4.95. This is the general commission that I see. But there are some who ask 6.95, some they ask 9.95, 99. Those are too expensive. Too expensive. Second, you should see fees, like for example, interest rate. Interest rate when you have a margin account. Margin account. So some people they say 2, some they say 4, some they say 6, some they say 10, depending. So try to see which is better for you. Don't go with the most expensive. Now 3, inactivity fee. Inactivity fee, what does it mean? It means in a month. Now if you don't trade, no trade, do they charge you? Yes or no? This is what we call inactivity fee. It means you are inactive, you don't do nothing. Let's say you change your mind and you want to invest in stocks. You don't want to buy and sell, you just buy and leave. If they charge you, it's too bad. Now 4, streaming data fee. Some brokers between the bid and the ask, if you don't pay, they will give you a delay. It means when you want to buy, you don't know the price. They give you, for example, 21.00, 21.01, but it is 20 minutes delay. So right now this price is not correct, so they ask you to pay. Now for me, see, for me, I don't have this inactivity fee, streaming data fee. It's free. I don't have inactivity fee. I don't use margin account. I have one, but I don't use it. Commission, I have 4. I have less, but the most thing good is 4.95. This is the most accepted right now. Be careful of those who they give 0 commission and they say we are here to help you. Okay, there is no free lunch at the market. Understand that. Don't play with this. Oh, I am sorry, I didn't put the thing. sorry man, I was explaining and without putting the information with paint. I'm sorry. This is sometimes okay, so you have the broker, you see here, commission 4.95 is the most accepted. Don't go with 6 or 7 or 9. This is too much. And even if you are now with the expensive one, try to change. Don't stay with the, because you are staying many years. From 4.95 to 6.95, the guy, your broker, is taking $2 for each transaction. it means he's taking $4 more in each trade. If you make thousands of trades in many years, this 4 multiplied by 1,000, for example, in 2 years or 3 years, you will end up paying more in commission than the other guys. Now, fees, it means interest rate. If you are doing margin account, it means you borrow money from your account, from your broker. Try to see the least interest rate. Don't go with expensive, especially when you want to stay longer, like 1 week, 2 weeks, 1 month, 2 months, because this guy he will be going to take 4% of your money. Okay, 4% of the money that you borrow. Now, inactivity fee, it means that sometimes you don't trade in 1 month, no trade. He will charge you fees, $10 or $20 or $30, whatever it is. Streaming data fee, it means some brokers will ask you to pay for the bid and the ask to be live. If not, he will give you a delayed quote. A delayed quote, it means he will show you 2100, 2101, but right now maybe the stock is 2150. So you don't know what is the right price. So this is too bad. If you find a broker that asks you streaming data, change him. Inactivity fee, change him. More expensive commission, change him. Don't stay with these losers that they ask you money, where are others they don't ask you money. So stay with the cheap one. Don't go with the expensive one, because they just rip you off. And stay away from brokers that say you have 0 commission. Ask yourself, there is no free lunch at the market. What does it mean? It means that the broker, you are his customer. How can he make money from you? Don't tell me that he is giving charity for you. And this is why the people, they don't understand. And you should search why they give you for free, because there is no free lunch in the market. Understand that. So thank you very much for this question, and hope I have answered this question. Thank you very much. Robert Tijon said, IPO don't have a history. That's why they are very risky. Yes, because they just began. The IPOs, no one knows about them. They are new in the market. Companies that no one knows, they don't know if they are making money, yes or no. They just come from the private. Understand that the private will not put public information about his business. Understand that. But if the company is public, it must show how much money it makes, how much money goes to executives, how much money, a lot of things is shown. Who are the major holders? It means mutual fund that they own this company. So they give you a lot of information. The company gives a lot of information. That's why the people, they choose either to invest in this company or not. Now, Robert Polo said, in IPO, the initial primary market investors immediately take the profit and sell out to the secondary market. They like nothing better than creating and taking profits. Now understand that this is what happened, Robert Polo, about primary market or secondary market. Okay, see what will happen. I will try just to explain this to make you understand how this works. Okay, now this company was private and now is going to be here public. Now, let's say the company now in private has 1 million shares. Okay? 1 million shares. But they make 99 million shares. This, let's say, for the public to be sold here to the public. Since it is 99 million shares is too much, this company and the banks, they will sell this to brokers and banks, and this broker and banks sells to customers and to big customers, big guys. Okay? And in the public, all the other shares that are left is sold to the public. Okay? So the company, when it sells this 99 million shares, they will get money to their company. They will get big money. Now, this big money is what they need to make this a small company. Here, it becomes big. Because all this big money goes to this company to change infrastructure, to make more stores, to do research, to do advertising, to do a lot of stuff. And this is how small companies become big companies. So when they sell something worthless. It's just a share that it is virtual. It has no price. But when they sell it to brokers and customers and banks and the other stuff, it sells them with a price. Let's say it is $10. Okay? So this $10 for 99 million, all this money goes to the pockets of the private company. So when they sell, it doesn't mean that these executives or owners they get for themselves. But understand that the private company, let's say here, if we can divide, let's say this, 40% is for the owners of this company. Executives, owners, they own the company at first when it was private. Okay? Now this here is the public. All the public, the mutual funds, the big traders, the banks, all this they buy here. They buy and sell as they like. But the private, the owners, they keep this because they should keep a big size in order to control it. Because if they sell everything, the company will be sold to the public. And they can be fired. They can be changed. They can do whatever they want when they do their meeting. Okay? When they do their meeting annually, they can change everything. So this is how things work. Now let's go to other things. Robert Polo said, this kind of thing happened when Facebook is first came out. It initially was sold out of, but they bought it by lower or strong run that I believe even Karim took part in back then. Yes, you know, Robert Polo, what happened is that these analysts, they begin to have a bad impression on Facebook. They say it's not a good investment. So if you own shares, sell them. That's why the people, they begin to sell for 6 months or 8 months. Now for me, whenever I see a big movement, I buy as a trend. Okay? I buy as a trend. It means when I see a trend, I buy. When there's a gap up, I am into it. I have made a lot of money, but I didn't invest in it. Although I believe in Facebook at the time. And if you go to my videos in 2012, when I speak about Facebook, I say Facebook will become like Google and it will compete with it. But no one believes me in 2012. Because people, they see the price and they say, oh, the price is going down, so the company is not good. But when you see the money, Facebook was making money, but not that much. Understand that Facebook has just begun with $1,800, $1,800. This is the nucleus. This is the money, the primary investment. If I tell you now there is an investment with $1,800, you say no, it couldn't be that. But Facebook began with that, a small software. Okay, so you see things change. Now Twitter, for example, it began good. I was in when it has a big trend from $45, it goes to $74 in 3 months. I was there. I make a lot of money. But when I see the stock going down, I exit. And I begin making videos that Twitter is doing bad. It was going down and down and down and down until it reached, I think, $13.73. 13. It was 74. Okay? So you see the difference between this kind of stocks. Another question. Okay, Shikhar Sood. Thank you very much for coming, Shikhar or Shikar. What is the criteria to buy a stock when it is going up and crossing resistance line regularly? Shikar Sood, you will find it in training level 2. How to search for stocks using stock screener. I have criteria to show you where to buy. So Shikar, either you can order training level 2, you study it. I think you have it. I don't know. I am not sure, but I think you have. You study it and then send me an email and we can discuss this and I will show you. What you ask me, what is the criteria to buy a stock when it is going up and crossing resistance line regularly, I will show you when to buy and how to buy it. And I will show you how to find these stocks daily without putting them in a portfolio and waiting for them. I will show you another way which is easier. Okay? I think you have some of my training. So if you have my training, please send me an email and I will explain. I will explain better and better. At least if you are my student, it will be very easy. Now, let's go to another question. Clown with the Twitter account. These companies that just talk about Apple, Google, Facebook, Amazon, Nvidia are making record profits each quarter. Do you think that we will not have a bear market as long as these companies in high profit? No, see, all depends on the mutual fund where they buy and where they sell. Even if you are making good profits, you can get a bear or a downtrend. I'm speaking about the stock itself. Because mutual fund, when they sell a stock, they are not interested in it anymore. It will go down because there is no one who will buy it and make it go up. The public are so confused and they have small money and they can't join into to buy one stock. So their money is everywhere. But mutual funds, they have a lot of money. So when they buy some stocks, they buy heavily. That's why these stocks go into a good trend. But good trends, we have a downtrend also. After 1 year or two, they make a lot of money, they will sell. So you see these stocks going down also. So it depends. So it's not only high profit that makes the stocks go up. Sometimes companies, they are not so good, but you see the stock is going good. Now for you, are you interested to give reasons to your money? Or are your reason is to make money? When your reason is to make money, you don't look at the profits. Up or down, I don't care. I told you before, clown with Twitter account. If your stock is $10, after 1 month it's $20. You double your money. Even if this company has never given the earning, it's after 3 months. But you in 1 month you double your money. What's the problem with these profits? Because when someone is buying, he's buying the price, and the shares go up day by day. This is what you should focus on, is the price. Don't go because if you see people what they say online, you get confused. You go to a company that makes the money, but you see the stock is going down. What do you say? Because the company has no relation with the stock. The stock, it is the game of trading. People, they buy and sell. The company has no relation. Company is doing what it is doing. It is making money. That's why it is there. Okay? But if, for example, analysts say, oh, this company has not that much money that we think it will make, the stock will have a gap down and it's going down. It's just because the people talk. When they talk badly, if other traders, they accept their opinion, they go short this stock, and the stock will be going down. Like when you see gap down and gap up. What makes this gap up and gap down? It is just the announcement of the company compared to the analysts, what they say. And that's why there are surprises. And this is what makes the stock go up and go down, because the traders make a decision. Okay? And another question with clown with a Twitter account. Kareem, did you move to a new house? I see different view than other videos in YouTube. No, I change the place only. Now, maybe you have seen old videos, 2012, 2013, 2014. This is just the wall. There is nothing here. But before, I was doing videos in my sitting room, and I was doing videos like this. And the thing I changed is very tricky, because some women, when they begin to watch my videos, they are not interested in what I say. They begin to look back. Oh, this is the curtain. Oh, this is not. This is a table. This is, I don't know. This is the color. It doesn't match the thing. This is so. So it was very funny with these women, because I know most of the people who get interested in the house mostly are women, or those people who are just, you know, they want to see like I'm having a TV or news or the other stuff. You know, I am not. So that's why you see changes. But clown with Twitter account, I think if you go to watch my videos, there will be change always. Thank you very much for this information. Shikar Sood said, sorry, I missed your explanation. Sorry, I missed your explanation. Can you tell again? What kind of explanation? Oh, you mean when you say what is the criteria to buy a stock when it is going up and crossing resistance line regularly? I say to you, I think you are my student. I think you have ordered some training. Please go to training level 2, study it again. If you have my subscription, study the training again, training level 2, 3, and 4, and come back to me and send me an email. We will discuss this. You can send me an example and we can discuss this. But let's say if you are not my student, but I think you are, but if you are not my student, I can't give you detailed information about my training. You should order the subscription. You subscribe to my subscription, or you can go and order training level 2 or 3 or 4, and then I can give you information about how to buy when the trend is going up. I will show you. It's very easy. I will show you. It's not a big deal. Okay, you are my student, so I can't explain to you here because here I don't explain training. So please, Shikhar Sood, please, as you know my email, please send me an email. Send me this stock or that you are looking for, and then I can answer you later. Okay. So since you are my student, Shikar, I will see what levels have you ordered or subscription, and then I can give you information. So please send me an email, okay, and then we can discuss it later, because now I am doing general thing. I can't go into details because I am not doing this live for explaining my training. Clown with Twitter account said, why we see the surge in price in big companies ahead of earnings announcement? Now I will tell you, Clown, in order to understand this very quickly, I will just show you this. Okay. So it's not big companies or small companies. Any company. Let's say it is XYZ. Okay. The stock is $20 here at close today, for example. Let's say it is today, and today is Friday or whatever. Now, at close, it means 4 p.m. The stock, this is today, this is tomorrow. Okay. Now, at 4 o'clock, they say that after 4 p.m., after close, there is the earning news. Now, earning news, what is it, earning news? It means the company will say how much money they make in each share, in one share, how much money. Let's say they say that the earnings per share is $2. If you own $1, it means that you make $2. This is the real money that the company has made, but they don't give you this money. It's just the quarter. The quarter, it means each 3 months, the company announces. Now, if, for example, the analyst, what do they say? It says, if they say, for example, the company will make only 1.50 per share. Now here, if the company announces 2, what does it mean? It is good news. So the stock went 20. After 4 p.m. when we have the news, people here begin to buy, and at the open, which is 9:30 a.m., let's say the stock is $27. So here we have what we call gap up. It means the stock has jumped from $20 to $27. Now, let's say the opposite happened. The analysts say that the earnings per share is $1.50 per share, and they make only $1. $1 only profit for each share. So because here the people or the traders begin, they sell short, they sell the stock short. Here after the market close, and here before the market open. So let's say the stock opens at $15. So there is what you call a gap down. And this you see it in this thing. Now let's give you an example of Google, for example. So you see here in this here we have a gap down. It means the stock has been going down. Now let's give you Facebook. Maybe we see a gap up. Yes, check here, for example. You see this here? Here a gap up. Facebook has a gap up. It was 159.69 cents, 59 to 174. $15. This is called a gap up. It means the earnings of the company was better than the analyst. Okay, so this is just examples to know the gap up and the gap down. Okay, Clown with Twitter account says surge in volume few days before. No. The volume has nothing to do with that, because how the volume go up without knowing the information? The volume goes up after the market close. The people, they begin to buy. You can see it. If you have a broker, you open the stock when there is the earning, you will see if the stock is going up or going down. You will see it after the news. If you want to do it, you can do it. But this you should have the broker in order to see, because you can't see it outside this thing. Okay? Now, let's continue with the questions. Jason H said, company can release great earnings and stock will tank. I have seen it happen many times. Yes. Now, why is that? This depends on the traders, what they think. Many times, the stock will do nothing. It doesn't go that much up or down. And there are stocks who have never get a gap up or gap down. So you understand that this is mainly most of the time for some stocks that are well seen by analysts and by traders. Okay? Now, stocks that are well known, a lot of day traders, they follow them. And they gamble about and they bet if there is a gap up or gap down. Some people, they day trade them. It means they see the news and they begin to see the price. And they trade them. They buy and they sell in a few minutes or 10 minutes, 20 minutes, 30 minutes. You can do that also. Okay? So there is no guarantee. But Jason, when I'm trying to explain the general thing. Okay? General thing that happened in the market. But to predict the market is so bad. That's why we don't predict. We don't predict what will happen in the future. We decide what we want to do and then we see after the news. Jason said, and sometimes the company will miss the earning and the stock will trend, so don't rely always on earnings. Yes, no one is relying on earnings because it is something that it is sudden, okay, and it has a risk. Sometimes the stock is trending good, but the bad news makes a gap down. Okay, and the guy who is in the gap down, he can lose a lot of money. Excuse me. Okay, so Jason, here, as we are trading, we don't predict anything. If you are into a earning date, you have the choice either to stay or to sell, because there is a risk of getting a gap up, which is very good, or you get a gap down and you lose a lot of money. Understand that some gap down, you can lose a lot of money. 2 weeks or 3 weeks ago, one of the guys, he was an ETF, and this ETF goes down like 90%. 90%. He lost all his money. It's just because there is a big risk in some ETFs that the people, they don't know. That's why for me, you should control the risk. You should trade with the risk. There is no way to avoid the risk. Always there is a risk in the market. And thank you very much, Jason H, for your participation and your contribution. Thank you very much. Clown with the Twitter account: do institutions and retail traders trade through earnings? Yes. Anyone who is interested, he can trade. Always people will have free money. There are some people who are following this earning and they make a strategy about it. Okay? And these people, in seconds, they can buy millions of shares. I have seen once 347. It means just 2 minutes or 3 minutes before the market close, a stock goes $8 in 1 minute or two. It's just because they hear the news and they buy heavily. The stock will rocket from, let's say, 20 to 28 in 2 minutes. That's why in the market in USA, the market can change dramatically. You know, in some other markets in the world, they put limits to the price. I think in India, if I am not wrong, someone told me it's 10% up or down. No stock will go more than 10% and no stock will go down 10%, which is very good. Okay? Very good, because the people who invest for the long run, they don't lose that much money. But in America, there is a total freedom. I'm telling you, a stock was $2, it goes to $42 or $43 in one day. So you see how crazy is the market in USA. So it is so crazy. So in general, if you want to stay with this earning news, you stay. If you don't like it, you just sell, or you don't stay, or you buy a few shares. But sometimes when you see, let's say, a good gap up, you will realize that staying is very good also. Okay? No, it is not. No, it's not halted. It's the whole day. It goes from what is it? I think to 43. Last week we have seen this in one day. It happened in America. In America, it happened. Everything can happen because there is no rule for the stock movement. There is no rule. The exchange, they don't control how much a stock can go up or go down. Okay, there is no. Some companies, like drug companies, with the FDA, it means when there is a drug or there is a medicine to be approved, sometimes when this drug is not approved, the stock will lose 50%, 70%, 90%, just because of this bad news. And sometimes a stock go so high because of this news. So in the stock market, in our stock market, like in USA, things is very liberal. It means there is too much freedom. Other stocks in the world, they are not free. Okay, whatever you do, they control, they put something to control going up and going down. So here, it is the total freedom in stock market. The stock can go up very good, can go down very good. People, they can make a lot of money, they can lose a lot of money. A big risk. That's why people in mutual funds or in ETFs, we have an index. It means a lot of stocks, a lot of bonds, a lot of stuff. So when the stocks go up or go down, you will get the average. So you will not get the whole thing for the good or the bad. So you get the average. That's why the people, they don't expose to themselves to one stock, for example. You can make a lot of money with one stock, and you can lose a lot of money with one stock because the risk is too much, because all your money is tied to a one stock. Okay? So, as I told you before, things change. The market will never stop. There is always gap ups. There is always gap down. There are always stocks going down, other stocks going up. So the market is always a mixture of things. Penny Camus said, do you add money to your stock during the trend? No, sometimes I can resize my positions. Resize my positions, it means, let's say I have 10 positions. I see 7, they are doing so good. I can sell 1 or 2 or 3 and put the money in the other thing, and I stop buying stocks. This is just because the movement is so big. But I am doing more risk but I am making more money. But in general, I am always having positions in my account, and I will never, for example, put all my money in one stock. This is very, very dangerous, because all your money account will be at big risk, especially in the earning dates or earning news. Okay, so penny camus, I always have positions. These positions, it has guidelines. If you want to be interested how I do these guidelines, how to do how many positions, how to minimize the risk and maximize the profits, you can check training level 8. How to minimize risk and maximize profits. This is called training level 8. You can either order it, or you can do my golden subscription, and you got 13 training levels, whatever you like. So here is my email and my website. You can go there. Training level 1. Training level 1 is for free if you are interested. If you have questions later, you can send me an email. Clown with Twitter account said, what do you think about company like Tesla is searching lithium prices would kill it? See, I don't follow what the companies are doing and taking conclusions. You, for example, when you follow these things, you are taking conclusions and you are making your opinion about a company. For me, I don't do that. For me, I see its price. I don't care about lithium. What is it? What do you say? Yes, lithium or another product or whatever it does. I don't care about what it does. I care about its price. Is it moving up to make me money? Yes or no? So you understand that I am not going to check what the company is doing. Or because it does this, I buy the stock. No, I don't buy the stock because of lithium or about any other products that it makes. Whatever it makes, I don't care. For me, I care about the price. If I bought it at 150, it goes to 200. I am making $50 for each share. This is what makes me happy. It means to make money. Okay? Here is the Hulk. Is coming. He's happy today, this Hulk. How to earn $10,000 a daily. Yes, that's very good. Do you see me like a magician? Having money from my pocket or playing some games to make money? No, I don't print money here. You should have a lot of money to make money. Okay, it's a business. Look at this. It's like a business. Let's say you are doing small business. Let's say you are selling cars. You buy a car, few days you sell it, you make profit. But if you are a big dealer, you sell in each month 100 or 200 cars. What do you need? What do you need to have 100 or 200 cars in order to sell them and to make millions of dollars? You need money to make money. The fact that you are selling cars, you sell one car at a time, in 1 week or two you sell one car, the fact that you don't have money. If you have money, you can do a bigger dealership and you sell more cars. So it's all about, the first thing is about money. But if you know how to trade, it's not sufficient. You need to have money to make more money. Because when you buy a position like a stock with $100,000 to $200,000, you buy a stock, it's better than to buy $5,000 or $1,000. Even if you make money, it's not a big deal. Okay? So you need capital. As he said, whole Chager, he said, you need a large account, you need a capital. And what do you do with this money? $10,000 a day. What do you do with this money? You want to go to the moon with this money? What do you want? Why do you want $10,000 a day? Oh, the Hulk! You have a big you want big money. I don't know why you want this big money. $10,000 is too much money in each day. So you should have a big account. So as I told you guys, with the clown with the Twitter account, as I said, sometimes some people do what we call speculation. Speculation is when you know something about the company, or you are following the company too much. You know what it does, what it doesn't does. You know how it makes money, why it makes money. You know a lot about the company. If you know more information, you can do what we call position trading. You buy a company for 2 or 3 years because you understand that it has a big potential to become big. This is speculation. Now, for me, I don't do speculation. I don't speculate. I don't predict anything. I see stocks, I search them with my criteria, I see the chart, I like it, and then I buy and I put stop loss. If this company price is going up, I keep it. And I try to handle it until I sell it. If the company goes down, I am wrong, I exit, and that's it. I find another company. Okay? So it's something that it is continuous. You do it the whole year, and this is how the people make money in swing trading or short-term trading. It's the same as day trading, but you don't trade that much. Yeah, and you don't have to be in the morning in the stock market to watch the price, the open. No, we don't do that. We buy at the end of the day when we have the signal. We put stop loss, and that's the job that we do. That's it. So the main thing in order to make to have a bigger account is you try to save more money for your business. Even if you don't know how to trade just little and save money into your account, because a broker account is like a bank. When you put money, it's like a saving account. It means it's like a bank. The broker will not touch your money. If you want to trade, you trade. If you don't want to trade, you don't trade. So the broker will not oblige you to trade. So if you have 10,000, try to make it 20,000. If it is 20, make it 40. If it is 40, make it 60 or 70. The more you have, the more the ability to buy stocks. Okay? And to buy bigger stocks and good stocks. This is the main thing in trading. But if you have $500 or $100, as I see people, and they go online searching for someone to teach them how to make from 100. I see it in one guy online. He asked them to bring $100 and he makes them $100,000. Okay? Do you believe that? So people are so crazy. This guy sells them a dream, which is just a dream. No one will be making this. But people, they believe because they believe in their dream to make a lot of money from nothing. And even if they are educated, they go to university, they study trading, they study how the companies work, how to make a business, expenses, they study everything. When they come to trading, they forgot all what they study. As if trading is something magical. It has nothing to do with business. So that's the problem. Yes, Wiseman said, the Hulk, keep adding more capital to your broker account. Also practice to become a better trader. You will see larger profits. Yes, that's true. Penny Camus said, sometimes I got on a trend and after a week the volatility starts to rise up and down from the 5% after a week to 10% in one day. So I try to cut some from the stock and bring it back. Now, Penny Camus, there are techniques and how to deal with the trend. This, I have training level 7, how to follow an uptrend. I have a trade there 5 months and 2 weeks. And you will see with these videos, each video I do in 1 week or 2 or 3. And I will show you how I change the exit point. It means when you want to exit. And where is my stop loss and why I do that. You will understand how I work. It has nothing to do with 5% to 10%, 20%, because the stocks move differently. Each stock is different. Sometimes you put 2% and the stock moves so good for 1 month or 2 and you make a lot of money without anything. But sometimes most of the stocks, they move differently. That's why you should need to understand what are the techniques that you should use in order to understand how stock moves. Okay? But you have your own solutions, okay? But if you want to understand other people's solutions, how do they do? You should study the training. And then you can ask questions. And you apply what is my strategy on your stock. And you see what's going good or bad. And then we can discuss this. Because the main thing about training is you understand the movement of the price. Understand that you can't make a rule. Okay? And you should fix this thing. No. That's why trading is an art. You should look at the chart, see what's going on, see where the stock is going on, and then you can make a decision. It's not put 2% or 5% and leave the stock. Like some people when they do trailing stops. It doesn't work. And you will exit whatever you do. And then you see the trend continues very good and you leave money on the table. And after 1 month or 2, you see your stock is going so good and you don't make any money from it. And all the people, they have made money who stay. It's just because you don't know how to deal with the stock. Some stocks are very difficult. It's not easy. It's not easy to handle them. So you need a big, robust techniques to handle these big stocks. Then he said, Penny Camus said, but you don't cut some during the trend and return that. No, there are a lot of techniques. A lot of techniques you can do. Jason Ailes have secrets, but later down the road, when they lose their entire account, and if and only if they continue to. Now, see. When someone loses his account, it means he's doing big mistakes, having big losses. Okay? So when you lose all your money, it means that you have done big mistakes, not small mistakes. And second thing, you don't know how to trade. And you are doing risky trades and you don't know. Some people, they don't know. I told you one guy 2 weeks ago, he bought an ETF. It was about futures. He doesn't know what's this ETF tracks. What does it track? It tracks futures. Futures are very, very volatile. He lost about 90% of his money. He has 12,000, now he has, I think, 2,000 or something. He told me what's wrong. I say the ETF is what is wrong, but you don't see what it tracks. So, like these guys, why you lose all your account while you can take a training and understand everything and you will never lose that much? This is the problem. People, they don't want to learn, but they want to continue experimenting by themselves. And sometimes you are in a big difficulty and you can't know what to do. Okay? It's just because sometimes when you are in a bad trade, you stay in this trade more and more and more, although your money is gone and gone and gone until your account is wiped out, because you feel you are weak psychologically to be disciplined. You are not disciplined because you don't know what is discipline. Okay? So he said, learn, they will realize at the end that price plus exiting when they are wrong on the stock only, and the trend is the key to profit trading. Read from the beginning, Karim, you missed the first part. Yes, oh, I didn't see that part, maybe. You said, Jason said, unfortunately, Karim, beginners don't think that simple trading as you can make them money, but they think it should be complicated and should have secrets. But later down the road, when they lose their entire account, and if and only if they continue to learn, they will realize at the end that price plus existing when they are wrong on the stock only, and the trend is the key to providing in trading. Read from the beginning. Yes, yes, I understand what you say. And the bottom line for everything that we are saying is that when you don't know how to trade, you begin to experiment. Okay? But when you experiment, you are weak. You are not disciplined. You don't know what to do. So, whatever you do, you will do mistakes. It's like you. If you don't know how to drive, is it possible that you just go into a middle of a town, a city, a big city, I give you a car, and you just begin to drive? You will have an accident in a few minutes. Why? It's just because you don't know how to drive. That is, trading is the same thing. But some people, they do accident after accident after accident until they die. It means their money is gone. Their account, believe me, because for me, I got emails from people who are crying. I got someone who has $45,000. Now he has $5,000. He told me, I lost almost all my saving. I say to him, why you don't take a training? A training with $200 or $100 or $500, whatever, is just a simple training that clarifies whatever you want to do. You will never lose this 45,000. Even if you lose 5,000 or 10,000, even when you're practicing, but it is okay. Because you are practicing and you are still doing some mistakes until you correct these mistakes and then you become successful. You can't just know things and then you become successful. Successful comes after knowledge and practice. Two things. You should know and you should practice. It's not just to know. Because if I tell you, oh, use the stop loss, if you don't know how to use it, you will lose money. If I ask you to be disciplined, to have rules, you say, oh, I am disciplined, I have rules, but you don't. In real trading, you don't. You buy a stock, you don't put stop loss. The price is going against you 1 day, 2 days, 1 week, 2 weeks, 1 month, 2 months. You lose everything. And then when you decide, you exit. So these mistakes that the people do, they continue to do it. That's why they continue to lose money. So Clown with Twitter account saying, is it true to buy when there is a blood in the street? I have no idea about this blood. I have never been into a street where there is blood or gangsters. I have never been there. Okay? And people, they just speak about things. But these people, they don't explain what is it. Okay? So if you know what is blood in the street, you explain what is it. I can explain to you the other things. But I think blood in the street, it might be when the stocks are going down, like a correction or like a bear market. But when to buy, this is a real problem. It's not easy. Okay? It's not easy. So this is, I think, when there is blood in the streets. And, you know, the best thing is not to follow this good names and good sentences that the people say. It doesn't help. What it helps is to understand how stocks move. That's it. When you understand that, you take any stock and you will see the chart. You will understand what's going on, where this stock is going, where it has been, what is now, and what do you think it will be. It will be in the future. If you have some criteria, you will have to buy or to wait or to sell. It means when there is panic selling, yeah. But sometimes when there is a sell-off, if you stay in some stocks, you will lose your shirt. Okay? Twitter was $74. It was going down. It has never been going up, like at least before. So if you are waiting for a stock, it was 74, it was going down, and you buy it at 60 or 65, and you stay, and now it is $13 or $20. Okay? Don't tell me that this panic selling you are going to buy. You will become the biggest loser in the market. Okay? So don't those people who say this, they have money and they buy a lot of good companies. They know that these companies, after a few years, so they are thinking about investing. They are not thinking about trading. And they don't need those money, because almost all the people who invest for the long run and they have too much money to live with, they don't care. But they know that the market will be recovered from its panic later for many years. But for you, if you need to make money, you can't stay many years. Like what did happen in 1929 when we have the big crisis. People, they have lost all their investment, all their stocks investment. They lose their jobs. 'They are in the street. understand that. They are in the street. People who are common people with families, with jobs. Now they are in the streets. How you tell me buy in panic? No, you don't buy in panic. You leave it until the panic goes and you see where the stock is. Don't just jump without knowing what's going on. So, Wiseman said, do you recommend using accountant for helping with being prepared for taxes owed from swing trading when one files their taxes? No, see, Wiseman, you should have an accountant, because if you have a business or you have what's this swing trading, or it's just an income, okay? But the accountant, he is specialized and he knows better what to do. But if you know how to do it, or you study it, you go to study a course about accounting, a class on how to do the tax. I hope you have the voice. If you know how to do the tax by yourself, you do it by yourself. You don't need an accountant. But if you have a business or you have some stuff and you have a lot of stuff to put, or you need an accountant or CPA, a professional guy who's doing. That's why this guy studies many years to become an accountant. Oh, you didn't study, so it's better to give your thing, and anything he can explain to you, at least you will understand what's going on. There is Kali Native Imperial. How are you, Kali Native Imperial? It seems I have never seen you before here, so welcome. He said, I only have 20 grand in my account and it's difficult to make money. For example, I can only buy 12 shares of Amazon because it costs. So, Kali Native Imperial, why you are going to buy Amazon? Why don't buy a stock that it is $10, $20? You can buy 2 or 3 or 4 stocks. And this is not the problem. The problem is that you need to learn how to trade stocks, how to manage your account, how many positions you have in your account, how to use the stop loss, how to follow the trend. This is what you need to learn. It's not what to buy. Why you are going to buy a few shares of Amazon? Is there only Amazon in America? There are 24,000 stocks, mutual funds and ETFs. Why you are going to buy Amazon? Amazon is totally big. It's so big. So you should learn how to trade first. This is the most important thing. And then you can begin to trade and practice. And you will never put all your money in one stock. This is as what we call money management. And thank you very much for your question. Now, you said you need more capital. No, you need more capital. It has nothing to do with Amazon. The bigger your account, the better. It's not because you buy Amazon. You should not buy Amazon or bigger stocks. Why you buy them bigger stocks? You can buy a stock that it is $10, $20, $50, $100. Why you go to 1,500? What's the deal? Who tells you to go to buy these big stocks? Big stocks are bought by mutual funds who have billions of dollars. They go to these stocks because they are big and they can buy whatever they want. Okay? And thank you very much. Kali Native Imperial, you can go to my my website. The first training is for free. You can just go to my website, take the first training, which has 28 videos, and either you can join us with the golden subscription, or you order training and you begin to study. What you need is training first, and then practice. You should control your account and do a lot of stuff, and then you will see that you can buy any stock, $12, $10, $50, $70. You shouldn't go and buy bigger stocks. Clown with the Twitter account, can I access all your training with $25? No. See, Clown with Twitter account, I put my email and my website. Please check them. Clown, you have, I will just try to explain here very quick. See, just a quick explanation for those who have never seen my website and how I think things. We have what we call silver subscription. You will have 1, 2, 3, 4, 5, 6 training. All 6 training levels. All this 6 is about how to search. Now, if you go to golden subscription, you will find 13 training. Day trading, swing trading, how to manage the account, or if you don't want this, or this is 25 per month, this is 55 per month. Now, if you don't want to, you can see training levels from 1 to 20. Now, you can order whatever you want. The first one is free. You can get it for free. You watch it. And then you go to 2, 3, 4, 5, 6, 7. You can get one by one, and there is 70% discount if you buy training levels. Now, if you want to do golden, we have 13 training, which is very complete, and we have the search. You have the weekly search. You have lessons each week. And you have the 13 training. Now here you have the search, you have lessons also, but mostly are about search, not other things. Okay, so you can choose whatever you want, and whenever you find the training, please click the training to see the discount. Discount is 70%. Now, if you want ebooks, it's 80%. Ebooks. That's the thing in general. Or if you Clown with Twitter account, if you have a difficulty, you can send me an email, and I will explain more and more. But it's very good. Some people, they like golden subscription. Most of the people, they like golden subscription. You can study by your own time. All the videos are online. You study until whenever you have questions, you just send me an email. I will explain, and that's how it works. So Wiseman said, so swing traders should just save money and use some of that money and just pay taxes when the time comes. Now, see, the broker will send you, I think, the 1099. It means all the trades, and they give you the big numbers. Have you made money or lost money, and how much you make or how much you lose, and this money you put it into your tax. Okay, but for me, it's better to use an accountant. Better, okay. It's better to use an accountant if it is complicated. For me, I don't care. I use my accountant, so I don't think about anything. Okay. So this is all for you guys. So always try to check, and when you file for taxes, you can claim $3,000. I think it's this maximum. You can't claim more. And you put it as a loss if you lose money. Now, if you make money, you put this kind of money and it becomes an income. And the more income you have, the more you pay tax according to your tax brackets. And you will see that when you are preparing your tax paper. Okay? So please, we are at the end of this session. If you have more questions, please ask right now. Now, if you have some questions and you don't remember them, you can always, here is my email, istockmoney@yahoo.com, and my website. You just take a look, send me emails, and we can discuss all this. Okay? So I think this is the end for today. And thank you very much for coming. And we hope next week, the same time, we can do another session like this. And I am always putting videos, daily videos. You can watch them. Whenever you have questions about videos, just send me an email or comment on the video and I will respond back. Okay? So thank you very much and have a nice day.